Hey, good morning, everybody. How are you, everybody? I don't know whether by the time you're watching this video, it's gonna be morning or in the evening. But anyways, how are you? Hopefully your day is going on great. Hopefully your day has been great. Hopefully your day is starting off great. So we're back at it again, and for the last this one day, I guess I've not recorded any video because of maybe I felt so low. I was feeling so low, and I'd given my time space out. But now I'm back. But I have been looking at the charts because I want to be learning every day. I want to be improving every day, and so far I'm seeing everything is going on great. And because I've managed to deal with my patients, I'm still working on it. So because I want to improve it uh, tremendously. Also, another problem I had identified is dealing with my spreads. So far so good, and trying to improve and refine, and also um, working on the week's constant encroachment. That's where I'm trying to get it right. So far not yet there, but I'm working on that. So before we get cracking or we get started with this video, guys, I request that you may hit that like button. Please subscribe to this channel, and take me into maybe 100 subscribers, and also uh, maybe a thousand views, please. So yeah, let's get cracking. So this is the daily time frame, and today is on Friday, by the way. And mostly we have a strategy, thank God it's Friday, whereby the daily range we are expecting a retracement to maybe the 20 or to 30% of that daily that weekly range. Maybe let's go to the weekly and see wherever we are. This is the weekly candle for gold, and what I'm saying is, or what I mean by the 20% to the 30% retracement of that weekly range, is we have our Fibonacci tool over here. Now we change the settings and try to have the 20% to 30. I guess I have them, and I'll get rid of my 0.5 so that I may add my 0.2 and 0.3 level. uh, Now the other way around, because we are bullish, yeah, from the low to the high. Yeah. uh, we thank God it's Friday, is like we can expect retracements to these two levels. So if we've been bullish, now Friday we're waiting for a retracement into this zone, meaning it can be a down close candle for Friday. So this is what I mean by thank God it's Friday, a retracement to the 20 or 30% of the weekly range. And talking of that, I wanna have it there and see. You can see those levels. Currently we are near the 20% level, but it's still early. Over here it's around 9 8 8 8:17 early in the morning. And I guess for the New York time it's around let's go to the 1 hour or 30 minutes. So New York time it's around Friday noon, midnight. Okay, so we are ahead of the time, because for New York time it's around, this is the true day, now day open uh for the New York time. But going back to the daily time frame, This is the preview, the target I've been aiming for this week. This daily, this previous week's high. You can see it has been grabbed. I guess I'll watch at what level it has been taken, or at what time this buy sell liquidity was grabbed. And now, as you've known, I'm bullish. Next week also I'll be bullish, and trying to I'll be aiming to be into discount or premium levels of this level. Okay, so generally I want to see price deliver into premium of this zone here. Let me hide that. So this is the discount zone, and then this is the premium zone. The greenish is the premium zone, whereby I'm expecting to see price drop into, and then from there I might watch if we might be selling off to this sell side liquidity, because we cannot we do not sell when prices are cheaper, but we sell when prices are expensive, so that we may get profit. So using the market analogy or the shopping analogy, so we sell when the market when the prices are expensive, but buy when prices are cheaper in discount. So yeah, I want to see prices retrace into premium, and I'll be watching the constant encroachment of this week. And I want to see, whatever I want to see is a close below this constant encroachment of this week, then see a market maker sell model on the lower time frames. For now, I'm bullish. So other factors that or the confluences that make my bias to be bullish is we have this mitigation block, whereby it's a violated order block, because it's a bullish order block whereby it was supporting higher prices, but with this candle this order block was violated, because this candle closed below the low and below the main threshold of this order block. So now it's no longer an order block but a mitigation block, because it's mitigating higher prices. It's preventing higher prices. As you can see, price would tap into it, rally lower, tap into it again, lose strength lower, and that is it until this point again. Was tapped into, low strength, tapped into, until now we've seen a candle close above the main threshold of that mitigation block. So this candle, or on yesterday or on Thursday, we saw a close above the the how can I call it, yeah, the daily mitigation block. So a confirmation that I'm going higher. Also, I had this order block here, which for now is a proportion block, because it's an order block. To the left of it we have another order block. Okay, so this is the main order block, another order block. So when we have two order block in in a range like this, or in close proximity, then we have this to be a proportion block, not another block here. So I should be changing this to a PB, a proportion block. Ideally, I delete that P, a daily proportion block. Yeah, and because it's on Friday, I'm expecting to see a retracement onto these, tap into the order block, so that from Monday again we may look for confluences from this zone going higher, right? So for that reason I'll drop down to the lower time frames. My anticipation yesterday was I wanted to see it drop lower, then from which we might be heading for that buy side liquidity. But what has happened, the buy side liquidity has been grabbed. So what I'm expecting to see is a retracement into this daily order block, then maybe continue higher during the other new week on Monday. But I'm not going to, it might continue running higher unless we have confirmation that I'm going lower. So I'll drop the lower time frames to have a clear confirmation that I'm going lower. So this is the 4 hour. As you can see, we had this drop down. It created equal highs there. Then we had this rally down. Where did it go to? You can see we had these fair value gap, small fair value gap there. Then this candle tapped into it, and then if we drop to the 1 hour, you'll realize we had another fair value gap at around this zone. That's why we have this overlapped wick, which is usually acceptable. So it tapped into the 1 hour fair value gap. Currently we're in the 4 hour. Let's drop and see. Over here we have this 1 hour fair value gap, so that's where we had this drop that came and fully balanced this imbalance over here. So yeah, going back to the 4 hour, something else I really learned was in these time frames, I should not be assuming any time frame. Something I've observed so far, like if I couldn't have seen that 1 hour fair value gap, then I couldn't know why this candle overlapped here. Then we have this rally up. Then over here we had a 2 hour fair value gap, and which supported price going higher. So so you can see that 2 hour fair value gap supported price, and the bodies were telling the story, but the wicks did the damage. And to which point did the wick do the damage? You can drop lower and get to see we had was it 30 minutes? Yeah, I was watching this fair value gap here, but only the market tapped into this 15-minute inversion fair value gap. You can see we have fair value gap over here. That candle's low, this candle's high. Yeah, it's an inversion fair value gap here. These candles, we have these candles are low, these candles high. You have that 15 minutes fair value gap. But if you go to the higher time frames, you maybe couldn't get a clear picture why could the market trace to that zone. So that's why the market traced to. As watching the week over here, because we had news at around this time, I wanted to see it drop to the constant encroachment, but that didn't happen. Then we had that retracement higher. So from that point, let me make it cleaner. I don't wanna have so many things on the chart. So I guess you can remember this, the daily order block from yesterday. So from this point we saw this retracement higher during news, and then a drop down, creating a fair value gap, a 2 hour fair value gap, which in the higher time frames, maybe the 3 hour, you cannot see the fair value gap. Everything is balanced. Around that 2 hour fair value gap, we have this 4 hour order block, this down close candle inside this bullish market. So that's why I wanted to see price retrace to tap into that order block, maybe I'll be watching the constant encroachment of these candles wick, then maybe a rally higher, but that has not happened. We have this buy side liquidity has been grabbed. So that's what happened yesterday, and we can see at around 5 a.m. this candle closed at around 9. We had news at 10, then we had this other candle open at 9. We had this drop into this order block, from which I guess I should be. Next time I'll be watching the higher time frames mostly, and maybe have my trades, because this is something I noticed, have my trades put on the higher time frames. Okay, like for this, because I was bullish for sure, and maybe after watching this candle form, what I could have done, I could have waited until it's closed and maybe put my, because I was bullish after watching the two as I was watching the 2 hour time frame, as I've shown you, then I could have come to the 4 hour and maybe put my buy limit at the top, or at the around this point. So there's something else I'll try to improve on. Put my buy limit around that zone, with my stop below the constant encroachment of that week. Of course, target you want to, yeah, there. I guess it could have been hit, but yeah, something to improve on. I'm still with, I guess I'll be risking a quarter of the account, or maybe yeah, a quarter will be okay of my account, and then wait this to play out. But what happened, we can see this retracement lower, so I'll mark these daily, this 4 hour order block, so that we may see what transpired in the lower time frames. Yeah, there is. Yeah, that is it. So dropping to the 3 hour or the 2 hour, you can see it was tapped into at the top. Again into the 1 hour, you can see the top was tapped into again, because at around 10, that's where I could have entered my trade. Then I've been tapped into again, rallied higher, then a drop lower that came and tapped into it, maybe a pyramid of that trade. Then we had that rally higher, and it happened after the rally happened after the lunch, because the New York lunch usually happens from 9 no 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 from 12 p.m. to around 1:30. So at around 2, that's when we had this massive rally higher. So we had a consolidation maybe during the AM session, then this huge or sharp rally higher. So something else I'm noticing, that during the morning sessions, I don't know why things were consolidating, or things were in a range. Then later on, we had this displacement at 2. Something else, I guess, to run, but this for today, and maybe if I'll notice it, I'll try to see, or maybe adjust my trading times. So another thing to be watching on. So that's how price did play out. We had this consolidation. I was trading in these. I was able to make few bucks, and I was in a profit. I mean, yesterday I was in a profit, but was making losses, few losses and some profits. Yeah, but I ended up today in profits. And the thing I was doing is I was targeting high. I was targeting high risk to reward ratio, which was not being hit. The market could rally higher, as you can see in this consolidation. The market maybe could rally, then retrace low to my stop loss, take me out after I have maybe to break even. I had trailed my stop loss because of the market structure. Then I would be taken out. So that's how yesterday played out. But something I'm learning is I should learn to accept and take my 1 to 2. Nothing much, nothing less. 1 to 2 will be okay for me, and I think that's what I should be disciplined to do. So we can see the market tapped again into this 4 hour order block. Then we had that rally higher. So for now, whatever is happening is we have seen this buy sell liquidity has been grabbed, and this candle has closed above liquidity. Okay, this candle has closed above liquidity, something that when I see I am bullish. I want to see most of the time. Sorry guys, whoa, 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 whoa. Little bit sleepy. Most of the time when I see liquidity being grabbed and maybe I'm bullish, this is the thing I'll look for. I want to see a close above liquidity. Okay, if I'm bearish, I want to see a close inside liquidity. But if I have this next candle close below inside liquidity, I mean, or below liquidity, so it will be something else I'll be watching. But I want to see clear price action from the lower time frames to give me a confirmation that I'm going higher or I'm bullish. But what I want to see a Friday retracement to the daily order block, but I'm not being married to my bias. We have this week over here. I want to see whether we have tapped into maybe the constant encouragement. Not yet tapped into the constant encouragement, but I'll be watching that also. So we have you can see how the bodies are telling the stories. And into the 1 hour, I want to see a clear market make a sell model whereby lows are lower lows and lower highs are being created. So for now we don't have that. See this huge candle, down close candle, a rally, another down close candle. So I'll be waiting to see what the market will be doing. For now we are in a consolidation, and if we have a clear market make a sell model, then I will be targeting maybe these buy side buy side imbalance, sell side inefficient. I want to see sell side being offered into this zone. Then yeah, we call it a week. So that's what I'm aiming for. Let's wait and see how it plays out. I'm not marrying into the bearish bias. I want to read price action, then from there we might draw a conclusion. So let's wait and see. This is the video I've done for today, and maybe hopefully we get to learn together. So until next time guys, bye bye.